guys, biggest news for today. Drum roll, please. Target, Walmart earnings sell-off put retailers' inflation pain on display. What does that mean, guys? This is reality, but it's doing so well. And then, whee! I bet some people probably purchased it here, and then they were like, "We're doing so good." Like we can even this line. Look at this line being like, "Oh yeah, you know." Candle graph analyzing. Yeah, let's go up. Yeah, but we. Bye. See you later. And then here's also Walmart. Look. Starting early 2022. Wow. Okay. Do you see this? Like we're going. 가자. 가자. Don't go. Wee. Wee. Set지. I have no clue what happened. So let's try to figure out why. Higher cost of fuel, products, and wages prompt some companies to rethink how and when to raise prices further. But what's going on, guys?
Inflation is catching up with some of America's biggest retailers, as their recent quarterly results were pinched by higher costs in everything from products to fuels.
So they're saying they increased the price?
Investors dump-cheered on Walmart today and Target and other big chains such as Dollar Tree, Dollar General, etc., notching some of the biggest declines since the market crash of 1987. It has also stoked concern through financial market about the resilience of companies that collectively employ millions of workers in the US and abroad. The declines were part of a broad wave of selling Wednesday that erased 3.6%, or more than 1,100 points from the Dow Jones Industrial Average and 4% from the broader S&P 500 index. Major indexes have tumbled this year in response to move by the Federal Reserve to raise interest rates to fight the highest inflation in decades.
So they are saying that this decline was because of, first of all, the Fed OVARs saying, hey, like inflation's doing so bad, so let's increase the interest rate, which we've been seeing a lot, such as, Facebook was one of them. Also Rivian. I mean, Rivian had another issue probably because of their semiconductors, but etc.
The sell-off, which began earlier this year with high-flying tech companies such as Nvidia, Meta, which is Facebook, now has investors wrestling with the idea that the economy could be heading for a recession. Federal Reserve Chairman Powell said Tuesday that the central bank's resolve in fighting inflation shouldn't be questioned, even if it requires pushing up unemployment. We're really in an inflation scare this year, and essentially the concern is that the Fed is going to aggressively choke out growth as well as inflation. Target share tumbled 25% after the retailer posted weaker than expected quarterly earnings and said it would rather absorb higher costs than raising price on shoppers.
What does this mean? It would rather absorb higher costs. They're okay with getting less profit than increasing prices on shoppers. So they're okay with products not being sold even if they lose money. Make less money. Okay, make less money. This would also mean better image first than later price. Target is like, hey, we only care about brand image right now because we're not going to make consumers feel pain. Just not going to sell as much as we used to. This happened and they're okay with this then? Maybe they must have earned so much. Probably also worried that higher prices would mean lower sale volume. Maybe even less sale revenue. Do you guys think this is a great plan on saying, hey guys, instead of, raising the price on shoppers, we'll just be okay with selling less, because then shoppers are still going to come to Target. Is it better? Their strategy could backfire, and that they're still making money, just taking a short-term margin hit, buffing up their image a bit safer than risk of losing customers and sales. How come buffing up their image is losing customers? If it's the same price, then wouldn't customers still come to buy Target? Think of it this way. It's a way of saying we will sell things cheaper than other places. that are raising prices. You don't know if it's a short-term or long-term plan. So the price of the product is going to increase, right? Because of inflation and etc. However, so let's say if they were selling this pretty lipsticks for $5, the actual product sale might have been maybe like $10, but they're not increasing this price because of consumers, so they're minus $5, but they're being like, okay, we'll take it because we're giving consumers the chance to say, hey, we will do you good deeds, but even if it risks us losing money, or even if it gives us the risk of not earning as much money as possible, then why is consumer dumping so much money then? Or, you know, they sold so much today. Isn't this good news? Isn't this a good way of keeping brand image? Why? Even if their earning was lower than possible? This has nothing to do with stock? Consumer is not equal to investors, while investors actually might not like this plan because it's lower profit. And obviously, it makes sense. Obviously, guys, investors going to hate that because they are not earning. The company itself is not earning much, so they didn't see potential. So this is like gambling. Yeah, no wonder you guys are saying. Remember, Jinri, consumer and investors obviously should be different, and you don't invest with feelings. Wow. So investors are looking at it in the reality standpoint. They're like, another question, guys, I have. Do you think Target or Walmart, both of them, do you think they were overvalued and that, like, it kind of makes sense for this big drop to happen? Or do you think it's just because of the inflation? So every stock is overvalued and that it kind of makes sense that this big drop happened? If other stores raise their prices while Target tries to stay low, then more people could come to them. Yeah, so it is definitely a gamble. And so investors are selling because they kind of see things being overvalued. Wow, okay. So let's continue reading.
While we don't like the impact to our profitability in the short term, we know it is the right thing to do for our guests and our business over the long term.
So Target is saying, hey, you know, we don't care much about investors. We are more for consumers, is what they're saying here.
Walmart said Tuesday that higher product supply chain and employee costs ate into its profit in the late quarter. As a result, that chief executive described as disappointing. The country's largest retail by revenue said that while it generally passed along price increases from suppliers to consumers, inflation in fuel costs came faster than expected, and that it would continue working to keep prices on groceries low. After Walmart's stock shed more than 11% after its earnings report, shares retreated an additional 6.8% Wednesday. Analysts said that weaker results showed the consumers were beginning to curtail spending amid higher price. Many large companies, including retailers, have been able to increase profit during the COVID pandemic, which we just talked about earlier, even while raising costs for shipping and staffing. Passing along price increases to consumers while cutting expenses has been a common path to raising profit margin. But the latest results suggest there might be limits to that strategy amid current economic conditions. So other companies with this concern in retail and consumer goods include Best Buy, Macy's, Dick's. Oh shoot! Oh, that hurt my feelings suddenly when I talked about Dick's. Dollar General, Costco, which has dropped more than 10% on Wednesday. And we see other like Home Depot and etc. Both companies slightly increased their profit in latest period, but said that higher level of spending per trip helped them manage raising merchandise costs.
Shockingly, guys, one beneficiary of the trade down effect has been TJX, which looks something like this. You see a big downfall, but then it only went up. Increased about 7% at least for today. So why? Why?
So TJX, which sells name brand products at lower prices than department stores and other full price chains, even TJX experienced a hiccup in the first quarter, which makes Since if you look at it, I'm guessing right down here is their first hiccup, when most of its sale gains were driven by its international business. In the US, same-store sales were flat from a year earlier. Now, TJX CEO says shoppers at the companies, TJ Maxx, Marshall, home goods stores aren't pushing back against price increases, mainly because those prices are still lower than what consumers would find at full-price chains. Other retailers, including Kohl's, Macy's, Gap, etc., are scheduled to report earnings this week and next week.
So we will see for this week and next week how Kohl's, Macy, and Gap is going to do. And we didn't go over in depth about TJ Maxx, but we should go over this because just today increased 7%, and let's see. So why do you think, guys, TJ Maxx is so well? Just because they are a lower price department store. Here, they're also saying when most of its sale gain were driven by its international business. So they weren't doing well in the US market, but more in the international business. Because they're cheap. That's how the market works. The original brand are doing bad. Like, Target. So maybe if we look at, like, I don't know, I don't think Chanel, any of the named brand companies are some of them aren't listed actually. Chanel's not listed. But they have what's a famous brand that's listed, guys? And I want to see how they're doing all of a sudden. Louis Vuitton? Okay. Wait, no, that's not Louis Vuitton. Yves Saint Laurent인가? LVMH가 뭐더라? So Yves Saint, sorry, you are Louis Vuitton 맞구나. Sorry. Oh, I got it right. Louis Vuitton. Oh, I mean they're oh, it was a European brand. Let me look at Coach. They are also. Oh, is Coach this? Curry. Stop. Oh. So guess that makes sense why they must have increased. So cheaper brand because cost livings are expensive, and that TJ Maxx is selling brand products at a cheaper price. People are going to investing in TJ Maxx more. You know what I want to do, guys? Is like open up an investor mind and like see what they think about. Keep in mind, everything is getting compressed. A drop might have nothing to do with the company itself. That's true. That's true. So TJX usually operates like this, where they randomly get good brand clothes merchandise and sell it for very cheap price. So sometimes you get lucky and good quality stuff at cheaper price. True, true, true. And of course, like what Josh said, not everything might be the reason why it cost TJ Maxx to increase, but we do kind of see a trend that a lot of the famous brands out there, Yves Saint Laurent, Louis Vuitton, Coach, blah blah blah, are somewhat dropping while TJ Maxx is somehow increasing. So maybe we see a connection, since like what Secretary said, TJ Maxx operates where they somehow purchase brand stuff and sell it at a cheaper price, and some of them are good quality. So people are lacking a bit on money. They might seek out places like that, or just in general might not get hurt much by price increase. True. So yeah, I guess that makes sense. Since if living costs and everything's, increase so much that they can't spend much on buying luxury goods, and luxury brands, I doubt they're gonna have any discounts. Chanel's not out there listed, but Louis Vuitton's not gonna be like, hey, because of high inflation rate, we're gonna have a special discount of our spring SS edition, or sorry, not spring, 2022 fall winter FW edition. Like that, I don't think that's gonna come true. So I could see how it could make some connections with TJ Maxx.
Analysts are watching closely for any signs that the chain are starting to discount more aggressively. One possible trigger: Walmart finishes the quarter with too much general merchandise inventory. He expects Walmart to discount more to clear the goods, which could place pressure on other chains, including Gap and Target, to do the same.
What? So they finished the quarter with too much general merchandise inventory. So they're saying that they have too much merchandise in their inventory and they're hoping to sell this with a discount, which means that if Walmart is going to do this, Gap and Target, which probably is going to have the same issue as Walmart of having too much inventory, needs to do the same, which is going to cause investors to worry about the stock price or worry about seeing if this has a potential in the future. Walmart has too much general merchandise sitting in warehouse, so they will start doing sales to sell off the inventory, is what they're saying, okay? Which could either help with revenue, or investors also might think the profit isn't enough since the profit margin will be low due to sales because they're selling it at a cheaper price. The investors will decide after the sale, so it's saying investors are keeping an eye, but don't believe this article is saying directly whether the stock price will go up or down. So concluding this is, if you wanna gamble and try to predict what the investors are thinking, it's good to keep in mind of how Walmart and Target and Gap is going to do. I guess it feels very, I feel like just as a company perspective, if Walmart does that, I feel like Gap and Target will feel super pressured because Walmart situation and Gap and Target situation is also not going to be the same. So it sucks having competitors make choices where you don't feel comfortable, and yeah, that's what I wanted to conclude with. They're just gonna pass the expenses to the consumer. China is also saving up a lot. They still have that whole real estate issue and COVID issue. I thought China can't run factories right now. It's good news for inflation either way. More inventory, less pricing power. Gambling on consumer retail sector seems so sick. Yeah. Oh, and then maybe I can conclude this sector, guys, by saying this is really a gamble. You don't know. I mean, there's no way you could predict how investors are going to feel like and how it will cause the market to be when Walmart start putting discount on their inventory. So it's a risk. This is somewhere I don't want to be in, and I don't know what to do with dicks. So moving on.
Target and other retailers had benefited from raising sales of higher margin goods such as kitchen appliance, television sets, and furniture during the pandemic, and profits increased. On Wednesday, the company said earnings for the April quarter were hurt by higher markdown rates and inventory impairments, and lower than expected sales in those discretionary categories. We did not anticipate the rapid shift we've seen over the last 60 days, Target CEO said, after elevated transportation. I don't want to talk about this. There's nothing. So he also said that customers were buying fewer big items such as bicycles, TVs, and kitchen products than in the past 2 years. Shoppers are moving from buying small kitchen appliances and maybe replacing that with gift cards to restaurants, entertainment, as they return to a more normalized lifestyle.
Because of COVID pandemic, people were buying more because they had to stay at home. Or if they could only go outside and stuff, that they were buying TVs and bicycles and kitchen appliances. But then now, since COVID are slowly easing out, I don't want to say it's ending. You never know if there's gonna be another wave or anything. Now they're moving on to more of restaurants and entertainments with gift cards. So they're meeting more people and giving them more stuff.
Company ended with, while Target's CEO said the spending shift has been significant, shoppers are continuing to visit the retail store. The number of transactions rose nearly 4% in the April ending quarter.
Wow. That was a lot of information they mentioned. So let's start off. We did already have conversations in between about this article, but let's kind of finish off with saying, what do you guys think about? What do you guys think about consumer products decreasing up to almost 25% on just today? One day, Wednesday, guys. One day dropped 25%. So in short, retail bad, travel good. Would this have been a stock worthy to invest in? Do I see a future? What future do I see in Target, Walmart earning? If you guys want to talk a bit more about that. People upgrading home stuff because they're home all the time, now going out. So conclusion, I like this. Retail outlook. Bad. Like capital. Sorry, I'm writing on your face. Unless inflation stops. Anyway, so to conclude today's article and the situation with Target and Walmart, retail, if you guys invested in retail before today, hold on to your I don't know, maybe hold or maybe let it loose. RIP, I'm sorry. Like what chat said, if inflation does not stop anytime soon, in Korean we call this you better 좀봐. But yeah, anyways, that's a conclusion for Target and Walmart earning, and I hope you guys don't go near any water, lake, or anything dangerous for my retail investors, and I wish you the best because I'm also negative, but I will allow you guys less donation if you are holding on to any retail stocks right now. So thanks guys for listening about Target and Walmart earning for today.